What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown. Last week, there were a few numbers and updates that came out about the economy. Particularly, one of them was the Federal Reserve's balance sheet skyrocketed past $6 trillion. So far, it's counting. It is continuing to grow at a record pace. Additionally, we are now at 16 million initial jobless claims. That is an unprecedented pace of how fast people are losing their jobs. It is faster than happened during the Great Depression. We're not yet at the total number, at a record total number of jobless claims and unemployment, but the speed at which people are losing their jobs is the fastest in U.S. history. The Federal Reserve announced that they are buying junk bonds and junk bond ETFs now as well. Politicians are already talking about follow-ups to the stimulus bill to get more and more fake money pumped into the economy. So really what we're witnessing here is the start of the crack up boom, the end of the dollar, and the culmination of Nixon's legacy. Today, we're going to dive into a few of the massive cultural changes that took place as soon as our society embraced a complete fiat money standard and removed any linkage to any limitation on government creating money out of thin air back in 1971 when we left the gold standard. We're going to look at some of the consequences of that, some of the things that unfolded since 1971, and why now, as we enter into this final stage, we're going to see some of those trends explode and grow exponentially. Let's dive in. Back in 1971, we ended what was left of the gold standard. Now, it wasn't a real gold standard. It was a gold exchange standard where other countries had their money backed up by dollars, and then dollars were exchangeable for gold, but it was only other countries and large institutions that could do that. That was the end of the Bretton Woods system that was set up after World War II. Now, prior to the creation of the Federal Reserve back in 1913, there was a real gold standard globally where gold was actually money. You didn't have to exchange currencies, and anybody could use gold as money. You could travel anywhere in the world and use gold as money. There was one global currency, and that worked well for thousands of years. And so those two events, the creation of the Federal Reserve, leading to a massive expansion of bank credit, multiple depressions, 2 global wars, the Bretton Woods system kind of setting up the last linkage of the global monetary system to gold, finally ending in 1971. Since then, we have seen some massive changes that almost nobody realizes are actually a direct result of being on a fiat money standard. So we're going to go through a few of those things that have changed. I'll throw the charts up on the screen, and I'll link the source for the data in the description below if you'd like to take a deeper look at the material yourself. Since 1971, we've seen a split in our nation's productivity and our nation's compensation for it. So when you see numbers cited about how much better our country has gotten and how much wealth has been created, that's usually cited in terms of GDP or GDP per capita. Those total growth numbers are never able to capture the nuances that show that the average household and the average individual has not kept up with the total, and the split between the super wealthy and the poor has been largely accentuated since we left the gold standard, because a fiat system benefits those at the top and punishes those at the bottom. And to dive into that data just a little bit further, we've seen a pretty steady growth in our total GDP growth per capita. But when you break that down into its separate groups and you focus on the real median wages of full-time workers, you see that ever since we left the gold standard, ever since 1971, that has stagnated even during the growth of the full GDP. And so that shows that there's a small number of people that are absorbing the majority of the benefit from that, and a large number of people who are getting stuck with footing the bill. Just to demonstrate the extent of the inflation that we've experienced since 1971, I'll throw a chart up here that you can take a look at. And this is using official inflation numbers. I'll do a video soon here on how the official inflation numbers are skewed and manipulated to not show the full extent of the inflation that we're actually experiencing. But even using the official numbers, it's pretty bad. And this kind of busts the myth that that inflation is not actually result of money supply, that it's money supply plus velocity of money. I hear that a lot, and I like what Yogi Berra has to say about this. In theory, there's no difference between theory and practice, but in practice, there is. So economic theory says that an increase in the supply of money doesn't lead to inflation, but it's an increase of supply of money plus velocity of money. Well, the fact of the matter is that when you increase the supply of money, the velocity of money also increases. So we're not talking about hypotheticals, we're talking about reality. When the supply of money increases, people start to spend that money faster. It's just what happens. The value of that money goes down, so I'd rather get rid of that money faster and swap it out with something that'll hold its value better. And you can see this trend actually started when the Federal Reserve was created, and that allowed banks to create more of a supply of money faster, as the Federal Reserve was able to act as kind of the bank for banks, the backstop for banks, and individual banks didn't really have to worry about the levels at which they were expanding the supply of credit, which is, credit is a form of money. And so we can see this trend started then, and then as the final cut to all ties on how much money could be created was severed, in 1971, we see inflation just took off. Now, if you look here at this chart, you can see that a huge portion of costs for most people is healthcare, right? Your insurance bill, if you've got a family of 4, your insurance part that you pay that comes out of your paycheck is probably $200, $300, $400 every single month. And that has only been increasing at massive rates every single year. Shocker, healthcare is not included in the official inflation numbers. And so we can see here that ever since 1971, there have been massive increases in expenses for the average family, and that hurts those who are at the lower end, and it doesn't hurt those as much who are at the higher end, and the people at the higher end can still afford to invest in assets, which gives them the benefit of inflation because the asset prices rise. Now, lest you think that this is a problem that has just impacted Americans, this is a problem that has impacted the entire world. And the fact that America hasn't experienced massive hyperinflation is an anomaly, not the rule. And the only reason we haven't so far is because we hold control over the world's reserve currency. And the more we take advantage of things that would normally cause us to experience massive disadvantages and catastrophe and financial ruin, the more we expose ourselves to the risk of no longer holding that coveted position of reserve currency, which will cause us to then start to experience some of the consequences of this financial irresponsibility. And we see here that ever since 1971, when the entire world has no longer had any tie to any finite supply of money, the hyperinflation episodes that the world has experienced have skyrocketed. They've happened way more times than before that. Now, the other thing that having a system like this does, it incentivizes debt and it punishes savings. I've talked a lot about that in prior videos on this channel, but here's a very quick chart to show you how much debt has exploded by since we left the gold standard. The fact of the matter is that when you have an inflationary environment where your money system is a fiat money system, it incentivizes debt. And so it's no wonder that we have an explosion of debt. When you have savers who are punished because the government continues to destroy the value of your money, you're gonna have an explosion of debt, and that makes the society fragile, not strong. So that's the debt chart. Here's a chart that zooms in on the savings rate, and not surprisingly, there is a massive decline in how much the average American citizen saves. This means that households in general are much more fragile and susceptible to collapse and consequences and financial ruin, and they don't have the robustness that comes from having a buffer zone, a financial buffer zone of savings. Now, when households experience financial stress, not only do they have to deal with all the consequences, the financial consequences of that, what most people don't realize is that there are other consequences besides just the financial ones. Case in point, divorce rates have skyrocketed since then for all age groups. And now this is, at first, it's a little bit surprising that since 1971, we've had an increase in divorces. But when you step back and realize, well, the number one or the number two thing that couples fight about is money. Well, the fact that you have an entire nation that is incentivized to participate in bad money habits that makes them more fragile and punished by doing good money habits and saving and not going into debt when you have an entire nation like that, everybody starts participating in these bad financial habits, you're going to have a lot more conflict in households as a result of all these bad financial decisions, which is going to result in more divorces. And more divorces are costly. That's not something that has a net benefit financially or in any other sense on society. When a lot of people start getting divorced, all that money is basically going into legal fees. Maybe the lawyers are the ones that have been benefited from that change there, but ultimately it creates more difficulties for the family structure and family units and kids growing up. And so this is just one more of the unforeseen consequences that makes a society and a nation more susceptible and weaker as a result of not having sound money. Another consequence of not having sound money is actually the incarceration rate, the amount of people that are going to jail. And again, this sounds like a surprising one, but then when you step back and take a look and realize, okay, number one, we have unlimited funding for whatever the government wants to spend money on. And so something that becomes really expensive, like war, for instance, or incarceration in prisons, all these industries that lock up these giant government contracts and are able to slowly increase the amount that they're scraping from society by locking up larger and larger contracts for government money, who has, basically no limit on how much it can spend. You're going to see a lot more monies diverted to that. And when you have a lot more money diverted to something, well, you need to fill up the prisons. The second reason why this is not actually that surprising is because when you look at violence and the incarceration rates, as you can see, are severely increased in males and kind of a little bit in females. Well, when you look at violence in a population, the number one indicator of how much violence is going to be relative poverty. Not just straight poverty, but relative poverty. So somewhere like South Dakota is going to have a really low rate of violence because they have a flat and an even distribution of wealth there. They're all very poor, but it's very flat. Somewhere like LA is going to have a really high rate of violence because you have the ghetto next to Beverly Hills, right? You've got relative poverty and you've got a really steep social ladder that needs to be climbed. And so when males at a young age see a society in front of them that looks like there's no way for me to progress, then usually what you see in that local society, whether it's a city or a state or a country, you're going to have more violence. You're going to have more resorting to things like theft, joining gangs, just generally participating in behavior that's going to be against the law or going to be destructive, instead of males devoting themselves to things that are going to be productive, things like education and getting a lower paying job to gain skills and work your way up the ladder. When you see a ladder that's too steep to climb, where maybe the rung is too high for you to even start climbing up that ladder, that's when you're going to have a larger percentage of the population devoting themselves to unproductive, violent, or illegal behavior. And obviously I'm not condoning this, I'm just saying that the research shows evidence of this. And so it's no surprise that we see a massive jump in incarceration, especially males, who are going to be the more violent ones biologically than females, when you have a system that is going to be benefiting the rich and punishing the poor, punishing good financial behavior, and incentivizing bad financial behavior. You're going to have a system where you're going to start locking up a lot of people that wouldn't have been otherwise. Now, why am I bringing this up and why am I making a video about this now? Because we are in the final stages of this where everything is turning over, and the only thing government can do, the Federal Reserve plus the Treasury, the federal government, Congress, the president, the only thing they can do is continue to push forward and double down on all the mistakes that they've made. Because when you're confronted with an option that's a painkiller, or you're confronted with a cure that will actually cause really painful side effects, a politician will always choose the painkiller over the cure. The only thing they're operating on is getting reelected. And so they're going to make the choices that in the short term are the least painful, even if they're the most damaging long term. If they were to make correct decisions, we would see massive pain and we would see massive failure, even more than we're already seeing right now. We would see a very painful collapse. Ultimately, if they were able to step back, completely deregulate, and get out of the way, after that painful collapse, everything we'd be able to rebuild a lot stronger and faster and more effectively with a more robust and strong system, and we'd be better off long term. But they're never going to allow that to happen on their watch. They're going to kick the can down the road as far as they can, as hard as they can as long as they can. What that means is that them doubling down on what they've always been doing, which is the same exact thing, is printing more money, spending more money, monetizing more debt. And this is important because the only result we're going to see from this is more of everything we've just been looking at. We're going to see more violent behavior, more civil unrest, more family turbulence. We're going to see a huge jump in inequality, massive increases in wealth from the top 0.01%. We're going to see massive financial failure from the vast majority of Americans. You're going to see job losses for the average worker at the same time as you're seeing massive bailouts, which bails out the executives and the managers and the investors. You're going to see politicians and bureaucrats giving themselves raises and passing on the crumbs to the rest of society. You're going to see large amounts of money directed at small special interest groups that have the politicians' ears. You're going to see huge actual needs completely get ignored. Everything that we've seen unfold over the last 50 years is going to explode in its intensity and its severity. And this is really Nixon's legacy. This is the world that we've created and the politicians that we've elected and the leaders that we've followed down this path. And I can only hope that once this finally ultimately collapses to the point that it cannot continue, that the vast majority of people will finally stop trusting fiat currency and move to a hard money system by themselves. We don't actually need a government to control our money. We've seen the results of that. Thank you so much for watching. Please let me know if you have any questions or thoughts in the comments below. You guys have a great day.